Hey everyone, how's it going? We just got the closing bell for Tuesday, October 22nd, and I'd have to say it's probably for most people a pretty exciting day. We opened down. It looked like that overnight the European and the Asian markets didn't really like what was going on in the S&P 500. We got some good earnings, like decent earnings, and then we got some terrible earnings, or at least terrible earnings reactions from names like GE. There was one other that I'm blanking on right now, and that caused us to open down in the markets. However, what was really interesting is that we opened at a key level. So let's take a look at where that's the YouTube. Give me just a second. Over here, let's look at our SPY. Let's see where we opened today. And you can see that the opening was down here just below the EMA 8. So when we opened, there was not a lot of downward pressure or movement in the market. So when we look at the SPY, how it behaved is, yeah, opened down, but then pretty much the entire rest of the day, it just kept on going up. And then you can see the last couple minutes, we started to come back down again. But what's really interesting is where did we close? Or we almost closed basically right where we closed yesterday. So this is the definition of choppy movement. We even high volatile, but choppy movement. So we open way down near this EMA 8. We trade down just a hair below it. And the rest of the day, we trade higher and higher until a couple points in the day, we actually were above yesterday's close. But it was really that last 2 minutes that brought us down below the close over here. So on a wider time frame, you can see that once again, we're just chopping sideways. We're just going like this. We're stuck in this box and we need some sort of catalyst to drive us out of the box. The only candidates this week that might drive us out of this box are really earnings. Earnings, or if there's nothing in the way, if there's absolutely no forces acting on this market, if we allow it to just trade on its own, then its natural tendency will be to flow upwards towards the top of this box. And then we'll get to 585 and we'll see if we cross it. If we can break up above the 585, we can break above this high, that means we're making a new all-time high. And from the gamma perspective, I should run it. I should show it to you guys. Give me just a moment while I kick this off. And then we're free to keep on moving upwards. Technically, everything looks beautiful. We have this nice upward slope. We have aggressive movement throughout the year. In this last leg over here, we're aggressive, maybe slightly moderate. And you can see that we went up, we pulled back, we went up. Now we're just going sideways. We may have a slight pullback or a mean reversion, and then we can resume our way upwards. So we'll see. So how does that differ? Because a few weeks ago, I was saying how that is going to be really difficult for us to get above the 580 without a catalyst. Now that 580 is the bottom of our box. So we did actually make our way above it, and now we're stuck in this new box. So it's just very small, low movement upwards. As we are heading into elections, we're not going to expect that a lot of things can move us upwards. So the big difference, what happened, was that there started to be a difference in the polls. What I said about the market just chopping sideways between 580 and 560 before the elections, that was predicated on the two candidates being very similar, very neck to neck. And they have been all this time until about the end of last week. We started to see a difference in the polling. And now currently there is a wider and wider gap that we're seeing. So it doesn't really matter which candidate. The market does not like uncertainty. When the market has uncertainty, it trades sideways. When we relieve that uncertainty, the natural tendency is to go up, unless what we become certain about is very negative news. So just one candidate or the other is not necessarily negative news. It removes some uncertainty off the table, and that allows the market to move upwards. If I look at my VIX, what I suspect you'll see is, yeah, it's coming down, right? Some of that uncertainty is being removed from the market, and that's reflected in this downward movement in the VIX. We're currently at 18. Now we're not going to, I seriously doubt we're going to get below 15 until we know absolutely for sure which candidate it wins. But the uncertainty now is lessened now that we have a clearer picture that one of the candidates is being more favored, or is more likely. I shouldn't say more favored, is more likely to win. So because of that, we were able to move above that 580 level. And now we're stuck in a new box towards the top of 580 to 585. Now, if I can actually get this gamma picture open, give me just a moment, then what we'll see is a nice gamma structure, or at least yesterday when we looked at it. I hadn't updated myself throughout the day today, but if the same gamma picture exists, then we have a nice spike here at 590, and then we have the beginnings of a pocket over here at 600. So that means if we can get above that 585 resistance, then we could we could float up and make a new box up to 590, or maybe all the way up to 600. So here we go. We see that we've got this strike at right here, 585. That's this big one right here. There happens to be a fairly large one right here at 584 as well. So those two are close enough together on something as large as the SPY that if we get close to 584, then we're probably getting sucked right to 585. But what you can see here is that we got this nice big one at 590. Once we clear 580, we should start to lose gamma, because the distance, the further we get away from a particular strike, the less gamma we have. And as investors get more optimistic, they'll start buying into this 590 strike or the 600 strike. And by the time we get to 590, maybe the 600 will be higher. And what we see is that we have a good number of candidates over here that could continue to grow too. So if things go really, really well, and investors stay super positive, we could actually move up even higher, 600, 605, 615. All of this, of course, is in the shorter term. This is not making predictions several months in advance or even years in advance. Gamma is a very short-term phenomenon. So we're just talking about in the next one month or so in order to get to 600, 605, and maybe out into the end of the year to get to the 615, probably a lot sooner than that. And more likely than not, we'll see a bounce off of one of these levels, because we can't just keep on making all-time highs. There is going to be some sort of pullback, some sort of mean reversion, some sort of potentially even correction. We already got a correction this year, so that's a little less likely, but at least some sort of pullback as we get towards the end of the year. Now, what that means for us is there's risk to the downside. That has never been removed. But what's happening now is there is becoming a closer to equivalent opportunity to the upside. So now we're kind of in this more neutral place than we have been in the past couple of months. The chances of us moving up are now roughly equal to the chances of us moving down. The chances of us getting out to the 600, 610, they're about the same as us getting to this MA50, or if there's a deep movement, then down to this MA200. That's a little far. I don't think anyone has this in their sights at the moment. Maybe later on, maybe with more data, maybe after the elections, maybe. But for now, I'd be surprised if we moved below this MA50. And if we look at it that way, then what we're starting to see is that we probably have about a 1-to-1 from where we are. This is probably roughly equal distant to this down here. So now we're in a much more neutral position in the S&P. We were chopping sideways, reflecting that neutral position. And that means that as long as the conditions move in a certain way, then this market actually could potentially flip into a more positive territory, especially given that this is the gamma structure. We do have obviously some exposure to the negative side, but it's not nearly as much as what we have to the positive side. So that gives us a bullish lean in the markets. Slight bullish lean. neutral right now. We're trading sideways. There is equal risk below and above, and the gamma structure though is showing us a little bit of favoritism towards the upside. So we're here at 583.32. I strongly believe that we could easily hit 585 sometime this week, and if we can get across above that 585, then we could be seeing 590 by the end of the week as well. And then after that, we'll see. Maybe we'll get to 600. But that getting to that level this week is probably a little unrealistic. Let's give it that a quick look. 600. Okay. 600 is 4.8 ATRs away, or it's going to be almost impossible for us to hit that this week. Right? But if we go to 590, 590 is only 1.38 ATRs away. So that is certainly within reason that we could hit that. So we're just going to look for a slight bullish lean this week. We did very successfully bounce off of this EM8 twice. All we need now is what I call a confirmation bar, just a green bar with a high or a close above this high or this high. That would be a nice confirmation bar. That would give us a little bit more confidence that we could break out of that 585 and get to that 590 level. Okay, let's take a look at our sectors. We'll see, are we looking at defense sectors? Are we looking at high-risk sectors? What is going on that front? Before we do that, one way to look at that is QQQ versus Dow Jones, actually. Not before I do that is let's look at it from this perspective first versus directly at the sectors. Let's take a look at the Dow Jones. Dow Jones came down below the EMA 8, but was able to end the day higher and just a hair below where we closed yesterday. So we'll call that basically the same. And basically it looks like right at or just barely above the EMA 8 as well. So we closed at 429.31 and the EMA 8 is at 429.24. Let's take a look at QQQ. QQQ completely recovered. We are 54 cents, 0.11% above where we were yesterday. So again, that's really just choppy movement, but at least it completely recovered from where it gapped down this morning. So that's very positive. Let's take a look at SMH. SMH is down on the day, but half a percentage point. We still have a green bar. It did recover. So this whole area, there's a lot of support here, as you can see from the moving averages and the quarterly VWAP here. That's not normally how I like to look at support. I know that's how a lot of people look at support, but basically what I'm looking at right here when I say there's good support is this right here. We can see that this is a good area of liquidity where price reacted to it many times, and there's a good amount of volume of transactions inside this region. So if I were to throw up a volume profile, for example, then I would probably see a reasonably large spike right here. It may not be the biggest on the chart, but it'd be pretty obvious. So this is a pocket of liquidity as well that we're kind of stuck in at the moment. And the SMH, if it gets a little push, it could move upwards and then break above this high and start to maybe go above this area of liquidity here, and then maybe new all-time highs. If that happens, then we'll certainly, well, I can't say certainly, almost certainly see a associated move and positive response in the QQQ, and probably a all-time high above this one in the QQQ, and then we'll have QQQ leading again. It can lead the S&P 500 and start to move upwards. Now, as the S&P 500 is kind of chopping sideways or not moving up nearly as aggressively as before, one thing we might want to do is start to look at small cap stocks. So small cap stocks have been lagging behind, and if we are going to believe this bullish picture, then it needs to catch up and start leading the S&P 500. So there's a gap to fill there, and it could move quite rapidly to fill that gap. So far, what we're seeing is a kind of messy picture, but it is moving upwards and sort of getting stuck in this area, or this 225-ish area. So a lot of liquidity there. So again, if we get a move up in SMH, we get a move up in QQQ, and then the risk appetite hits the general market, then we should see a move up in IWM. It could break these highs over here and start moving upwards towards these all-time highs over here. And then it can really start playing catch up. Now, that's assuming quite a bit. That's kind of a far look out. So what we want to do is narrow down that picture and do it and take a look at something more immediate. What about tomorrow? What about the next week? What about the next 2 weeks? We'll let the next several months or year take care of itself. Let's just kind of narrow in on the next couple days. So this week, can it get above this high right here? It could, but it's unlikely. We have Wednesday, Thursday, Friday. So it's got to get above this and break out. Now, if it can with strength, that would probably indicate some fairly large bars here, some fairly strong strength. That's a really good sign, but we're not going to count on it. We're not going to expect it because that is a little bit difficult at the moment. So 227.5. Let's take a look at how many ATRs that would be. Okay, so that would be over 3 ATRs. So that's a little pie. You need to move 1 ATR every single day this week for the rest of this week in order for us to get to that level. It's just probably not going to happen. So we're not going to expect this to fly higher, but we can see if it does bounce off of the levels that we have right here, this tiny pocket of liquidity right here, and it would be very positive. Just not expect it to fly out of here this week. So given that, QQQ, kind of similar, chopping sideways, SMH, very similar on the support right now. If it can move higher, that's great, but we're not going to expect a huge breakout this week unless there are some earnings that are coming up that I'm not aware of that are in these sectors that are just amazing and blowout, and it's a large enough cap stock that it could completely pull the entire index or the entire ETF up. That's possible because we do have some large cap stocks announcing, or maybe they already announced. Let me check on that in just a moment. But given all of that, are we realistically going to expect this to run? No. So right now, what we see is 590 is possible. We already saw that. We already have that in mind. 600, not for this week. It's possible, just not that likely. So we're going to lean slightly bullish, and into the 590 level is where we believe that's about the maximum it might go this week, barring any super big surprises with earnings. So let me take a quick look with earnings this week and sort by market cap. And then, or actually I should sort by the day it happens. So tomorrow, we're looking for tomorrow 23rd before market. Let's do it this way. That's weird. Didn't filter it. Let's try that again. Okay. So we've got market cap. We have Tesla. We have Coca-Cola. We have T-Mobile. Is this Thermo Fisher, IBM, some pretty large cap stocks here. AT&T, Nextera Energy, Boston Scientific, Boeing. We have a lot of pretty big cap stocks that are announcing tomorrow. So we could be in for some volatility depending on how all of these go. So before market, these are all before market. So we'll see. It is possible that everything that I said could be negated by some really amazing earnings or some really extremely terrible earnings. But so far, earnings have not had a huge effect on the market for the last 2-3 months. So I'm not really expecting anything too different than that. It feels like nothing really before the elections is really going to jitter the markets. We're just going to kind of do our own thing, maybe hit 590 by the end of the week, maybe 600 by the week after that, and then elections will be upon us, and then it'll be all about the elections until the elections are over. And then you'll probably see quite a bit of volatility, quite a bit of movement as people rejigger or rebalance their investments, because a lot was assuming that one candidate, that if this candidate wins, then this will happen. If this candidate wins, then these investments will do well. Well, once we get, yes, we have an idea. Yes, the odds are shifting. So there has been some adjusting of those investments. But after the fact, after the election, there will be a clear reason to adjust. There will be a bigger shift one way or the other, depending on which candidate wins. And even on the investments that were favoring the actual winner, those will likely slow down or pull back as well, because now that candidate is no longer making the promises. They're already won. They're not making the same promises. They have to take a little bit of reality into account. They are accountable to Congress. They don't just make whatever they want. They still need to go through the approval of Congress in order to get their policies pushed forward. So we tend to see a little bit of a slowdown after the elections, but a volatile period first before that slowdown. Okay. That was pretty thorough. I think we're going to leave it right there. I guess we didn't look at sectors. Let me look at sectors real quick. And then that will be it. Okay, that's interesting. So silver, well, let's look at a 1 month basis. Silver, gold, SMH, all at the top. Then we've got utilities, XLK, XLF. So we got some jumbling, but less so than before. We have pretty much all our higher risk sectors at the top, but then we've got this weird mix of utilities and gold and silver up there as well. So we are starting to see some alignment of the sectors, but of course we can't be sort of like XLY and XLP are right next to each other. So it's not perfect. Right? So we are still need some consolidation for us to get a clearer picture, or a mean reversion or a pullback, in order to get a all lights green, all hands go type of situation. And let's take a quick look at the silver and gold that's going on here, just because that's very interesting. So gold hitting another high up here. This is looking like it might peter out, or it needs a little bit of a pause or a pullback before we want to go in. So this is very aggressive. And yes, if you want to have a very aggressive entry, maybe just a tiny bit of movement backwards, you could try to enter around 251 or 251.5. That would be a very aggressive move, but a more level-headed move, a more level-headed entry point would be about this 247.2 level over here. And that is a nice little mini liquidity right here, plus the EMA 20 is approaching that level. So that would be where I would be looking to enter gold for a possible entry. This could run away, but as of right now, it doesn't look that strong to me. It is looking very strong in the past week, but if I take the last month or 2 months into consideration, it looks more moderate. So gold is definitely still being bought up and still being sought after, but we can get a little bit of a bargain if maybe, I could be wrong. It looks like we could get a little bit of a bargain if we just wait a little bit. So that's it for today. If you have any questions, kane@investpub.com. If you want to get on my Telegram channel, that is tradingpub.com/Kane, Kane. Have a wonderful rest of your day, and I will see you tomorrow.